Welcome to the Up-Level Dairy Podcast and the HighGround Dairy Monthly Market Update. And this is your update for the month of March. In the next 20 minutes, here's what you're going to hear. You're going to get the price action update. You're going to find out which feed cost factors to keep your eyes on. And you're going to hear about the situation in Texas that could be making thousands of dairy cows sick. And you're going to hear about all that today here on the Up-Level Dairy Podcast. This is the podcast for dairy farm owners, managers, and advisors who are committed to profitability, sustainability, and excellence. I'm your host, Peggy Coffeen, and it's my mission to bring you the conversations that will up-level your skill set and your mindset so you can be a top performer in the dairy farming business. And here to join me today to give us an update on the dairy markets is Curtis Bosma. He knows what matters to you because he grew up on a California dairy farm himself before cutting his teeth at the Chicago Board of Trade. And it's his mission to take the stress out of understanding markets and provide you with the tools to protect your profitability. This episode is brought to you by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. You can find all the links in our show notes for HighGround Dairy. Information shared in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current opinions as of March 18th, 2024, and only represent the views of the speaker and not those of HighGround Trading, unless otherwise expressly noted. It's time for our monthly market insights and the price action update. Give us the insights, Curtis. What do you see going on in the dairy markets?
So looking at Class 3 and Class 4 futures, just some price action here over the last month. We're looking at the settlement prices as of March 15th, 2024. On Class 3 side of things, in Q2, we're sitting at $16.55, which is down just shy of $1 per hundredweight over the last month. That puts us right around the 51st percentile, so just above a 10-year historical average there. In Q3, we're at $18.23, which is down 32 cents per hundredweight. Q4, we're at $18.39, which is down 18 cents a hundredweight. Both of those are above the 70th percentile, so still not terrible price range to be working with. And then looking all the way out to 2025, Q1 and Q2 are at 18.02 and 17.96 respectively. And those prices are relatively close to where they were a month ago, but still pricing in, just below that 70th percentile. On the Class 3 side of things, looking at Q2 of 2024, prices hovering right around $20, so 20.03 last there. Versus the last month, we are down 38 cents a hundredweight, but still holding on to a good price historically. Looking at the 10-year percentile, that puts us as the 81st percentile. For Q3 and Q4 of 2024 on the Class 4 side of things, we're at 20.65 and 20.94 respectively. That's down 45 cents and 21 cents. Again, seeing some losses there on the deferred parts of the forward curve, but all things considered, when looking at those prices historically, still well above the 80th percentile. And then into 2025 on the Class 4 contracts, we are at 19.59 for Q1 and 18.87 for Q2. Hasn't been a lot of trading out in those deferred contracts, especially in the Class 4 side of the market. So some big increases there. Q1 up 37 cents and Q2 up 52 cents. So likely just seeing some buyer activity there out in the deferreds. But those prices do get us up to the 79th and 75th percentile, respectively.
Excellent. Thank you, Curtis, for that market update. And I know that you are talking with dairy producers across the country on a daily basis. And one of your best skills is asking them really good questions. And so every month you pose one of those questions to our listeners. Curtis, what's the big question that you have for dairy producers right now?
I've been saying this a lot recently, but every year we're kind of faced with a new set of challenges. This year is no different to any previous years. So when looking at all this market uncertainty, what actions are you taking that provide you with clarity? Sometimes that could just be as simple as kind of assessing what's going on out there. What we really like to help with is putting together kind of a strategy around what those risk factors are, being able to execute upon that strategy, review it to kind of see how we've performed with anything that we put in place, and then just repeat that process over and over. I mean, it's every year, like I mentioned, we're faced with a new set of challenges, but it's nice to kind of have a process to go into that with.
You've done the hard work, so the dairy farmer doesn't have to. And today is March 18th, 2024. It's 12:25 Central Time. And as of right now, in this moment, Curtis, Give us a little more insights into what is going on in the monthly market forecast.
This is definitely the time of year where we start to take a look at the grain side of things. So looking at kind of feed cost factors and stuff for the year ahead. Towards the tail end of March is when the USDA typically releases the prospective plantings report, kind of showing all the acreage estimates for how much corn and soybeans is going to be planted in the US. And that's usually kind of the first firm number we have to work with as we start to piece together things throughout the crop year. So kind of looking ahead to this year, there's a couple of factors that we want to definitely highlight and make sure we're keeping an eye on here. A big one is what's going on in the U.S. soy complex. So if we're looking at the soybean side of things, the U.S. is set to see its largest carryout in soybeans in more than 15 years. So that's definitely something that's pretty notable. We're also seeing a large growth in crush capacity as there's more focus put on biofuel growth. This could be kind of in jeopardy with depending on how different political things play out over the next year or two. But either way, just kind of looking at current pace of exports and current processing capacity for soybeans and what's being actually crushed out there, we're, very likely to see a record in terms of how many tons of soybeans get crushed this year. In the US, we're also likely to see exports kind of struggle throughout the year. So from a U.S. soybean farmer perspective, there's a lot to be concerned about going into this crop year. But from a dairy farmer's perspective, when looking at this, it could mean some better opportunities on the horizon for key protein input in the rations. And whenever we're looking at the grain complex, since we look at commodity futures and options in the grand scale of things, there's far more liquidity and external players that are in the grain complex. So one of the things we always say is an important factor to watch is just following the money and seeing where that managed money has been in both the corn and soybean meal markets. If we look at this past month, the May contract for corn briefly traded below $4.10 per bushel. That is a new contract low for that. If we're looking at the CFTC commitment of traders data, which is what shows us how the managed money is being positioned in the market, from the week ending March 12, funds were net buyers of about 33,000 contracts of corn. That puts the corn net short position for these managed money funds at about 252,000 contracts, which is historically still, very large. However, they have been over the past 3 weeks reducing this short position by a net of about 76,000 contracts. So something that's definitely notable. It's kind of attributed to this recent rally we've seen. May corn's up roughly about 36 cents from the low point it was in February. So definitely something we're going to be keeping an eye on. On the soybean side of things, the May contract briefly traded below $11.30 per bushel this last month. Also a new contract low for May soybeans. Funds were net buyers in this past CFTC report of 14,000 contracts. The soybean net short position still remains at about 146,000 contracts, which is the largest it has been since 2019. And if we look at the soybean market as well, over recent weeks, some of this buying activity has kind of spurred on some support there. So we're about 90 cents off the lows there in the May contract. Another factor that we are keeping an eye on here in terms of the grain complex has been the safrinha corn crop in South America. There's been some dry and heat conditions that have been impacting the crop down there. This not only has implications for kind of the global corn balance sheet, but could also impact sugar production in South America. And since ethanol from sugar is a large market in South America, that could also have some, significant implications for ethanol margins in the U.S. if these weather conditions are to persist. Shifting gears back into the dairy and milk side of things here, we have some recent reports kind of talking about the demand situation. So every month USDA releases the supply utilization report. From this last report, a couple of key things kind of jumped off the page here. One was that cheese demand was really struggling. So total cheese consumption fell by 2% year over year in January. This is despite the fact that we had actually decent exports. So exports for the month of January were up almost 13% year over year. We're not huge exporters of cheese. Obviously most of our demand is domestic. So still as a net, we were down 2% year over year. So this loss of domestic demand was likely why we've seen spot prices for cheese struggle to kind of break out of that $1.40 to $1.50 range. There's been a lot of conversations around that export being able to potentially offset some of this domestic demand issues that we're having, because in a $40, $50 kind of range for a cheese price, we're pretty competitive on the global stage from an export standpoint. However, we still have not been able to make that materialize on a large enough scale to really impact prices here domestically. We're taking a look at the butter side of things. There's a bit of a bright spot here. So butter utilization jumped by 8.5% in January 2024 versus 2023. Obviously, butter is also a big domestic user. About 97% of our total consumption is domestic demand, which was up about 10.5% year over year. So still some notable things there. It's definitely causing from the buyer side, people that are setting budgets and looking at the tail end of this year, even though we don't have much of a stocks issue at the moment, where stocks are at a pretty normal to healthy level in terms of U.S. butter inventories. People kind of looking at these demand trends and saying, hey, we got to make sure we have our budgets aligned for the tail end of this year. So we've definitely seen some activity there. And I think that's, kind of the reason why we're seeing more divergence between the class 3, which would be kind of related more to the cheese market we talked about, versus the class 4, which is much, more heavily influenced by these butter market trends. Another more recent thing that's been kind of coming up here, and we've been receiving a lot of information on, has been a kind of developing story in the state of Texas. There have been reports of cattle getting sick, having impacts on milk production and different things like that. There's a lot of things floating around at the moment. We don't really have a ton of concrete evidence. But if we do look at what we do know that, there have been confirmed reports of cows getting sick across the Texas Panhandle. These reports have shown that the initial cases for this date back to, a little over a month ago. It's mostly impacting, higher producing cows that are, 70 to 200 days in milk. Initial signs of this have been fever, shortness of breath, and a drop in feed intake. As a result of that drop in feed intake, milk production starts to come off pretty sharply for these cows. And then there have also been reports that the milk coming out of these cows has been somewhat thick and yellow, likely attributed to some issues with mammary cells. But the milkers have been having a hard time because they start to prime cows and they realize that, hey, this cow may have mastitis or something. So they kind of tag it. But then when they go do a test, it's not actually mastitis. It's kind of something else going on there. We also have been hearing some reports that after a few weeks, some of these sick cows have returned to normal and have returned back to the herd and have been fine. So not a total loss in terms of, having to cull these animals if they're having issues. What we really don't know as of yet is, we don't really have a great number in terms of how many cows are currently or potentially affected by this. Estimates have been anywhere from 5,000 to 25,000 head. We'll definitely be watching this closely. I know HighGround has been putting out some content on this as we've been kind of tracking the story from multiple angles. Also, the source of this issue, there's a lot of different speculations going on, whether it could be an issue at a local feed mill or a change in silage or something going on. We also don't even know if it's necessarily feed related. Still a lot of speculation taking place around this storyline, but it's definitely something we'll want to keep an eye on because it will have an impact on, potential milk prices here in the next few months. Looking overall at the dairy margin outlook of where prices are at in this year, I know in recent conversations with a lot of producers, it's kind of difficult to see the light, especially if you're in a region where you're maybe faced with a little bit higher feed costs, whether it's from basis or corn silage pricing, or if you're, a higher class 3 utilization, because class 3 has been, kind of trending at a lower level than class 4 right now. Whatever it may be, it's been difficult for people to kind of look ahead of the future and see, any bright spots that are out there. But if we just look at the numbers, we kind of talked about this a little bit with the price action update. Some of these front month levels have been dragging on some lower lows. The spot cheese price has been struggling to break out of that $1.40, $1.50 range in the recent weeks. But if you look out to the second half of 2024, there's actually some pretty decent levels out there. So we're projecting an income over feed cost, and we kind of use this as our general barometer. But the income over feed cost for that part of the year is above the 75th percentile when compared to the last 10 years. So when we're kind of looking at that, what does that say to me that says, hey, right now may not be the best time from a cash flow perspective on farm for those of you that are not necessarily positioned or don't have a risk management plan in place. But if you look at the tail end of this year, there are opportunities out there to take action to make sure that we do have something protected. And so we definitely want to stay proactive, kind of keep our heads up here a little bit and be looking towards the tail end of this year for opportunities. A lot can change between now and then, so we want to make sure that our approach remains flexible, that we're not getting into positions that are going to potentially harm us if something significant happens. We kind of talked about a few things already in not only this episode, but in previous episodes that could have some long-term supportive implications in terms of milk prices. But when we see these opportunities present themselves for ability to secure a margin that's at a relatively positive level, we want to make sure we're taking action on these things.
And Curtis, and speaking of taking action, let's revisit that first question that you laid out for us today. And it was this: when faced with uncertainty, what actions do you take that provide you with clarity? And with all of the things that you just touched on, Curtis, from looking at some of those, from looking at the corn and the soybean market to looking at some of the international activities, butter, but also cheese demand, and then taking another swing at some uncertainty in what's going on in the panhandle and the potential long-term effects of that. It all goes back into looking at what are the things that you can control. Some of these things we can't control, right? But what can we control, and having some clarity on what that looks like. So revisit that big question of how to be able to find that clarity in your own bigger picture of your dairy farming business.
This applies to a lot of things in our business, not just specifically risk management. But the first thing we want to do is want to kind of assess what the issue is and what the potential for the issue could be. So we've been talking about a lot of different factors on this, whether it has implications for the feed cost or the milk price. We want to make sure that we kind of organize all those thoughts and understand where the risk factors lay and what the risks to, every dairy's specific business model is. And every dairy is a little different. So we want to make sure that we're not just looking at this from a blanketed approach. The second thing we want to do is we want to kind of strategize around this, figure out what tools could we or should we be using to potentially mitigate some of this risk. And depending on what those risk factors are, and if there could be some big changes in the market kind of coming in the future, that may change how we approach that a little bit. And then the third step there is just kind of look at executing that plan. So once you put the plan together, it's time to take action and actually execute upon what we put together as a strategic approach. And then from a fourth step, we want to review that, kind of see how things are going, keep tabs on the plan, make updates as appropriate. And then lastly is just repeat. This is a new set of challenges this year with some of the things that are going on, but every year presents new challenges. We have to make sure that we kind of have a bit of a systematic approach for how we come about this stuff and keep our heads up.
So just to summarize that, 5 key steps and taking the actions to take to provide that clarity. And it's 1, assess, 2, strategize, 3, execute, 4, review, and 5, repeat. And Curtis, we appreciate you bringing in your business insights, your market insights, as well as your personal experience and the personal care that you have for dairy producers out there and their well-being and financial profitability and sustainability of their businesses to the Up-Level Dairy podcast. And you had mentioned earlier as well that that HighGround is keeping tabs on some of these issues going on, whether we're in Texas, whether we're looking at the markets. So make sure you take a look at our show notes to get the links to be able to get those latest insights from HighGround Dairy and keep a pulse on what's going on in the markets and beyond. And we thank you for joining us, Curtis, here on the Up-Level Dairy podcast. Thank you for joining us, Curtis, and thank you to our sponsor, HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Find the links in our show notes to follow and get more information and insights from HighGround Dairy. Thank you for listening to the Up-Level Dairy podcast. I'm your host, Peggy Coffeen.